Today, we're joined by José Segura, Tax Senior Manager at KPMG Costa Rica, and today we will be talking about taxes. Jose, thank you very much for being here.
Of course. Thank you for this great opportunity.
Our pleasure. So, Jose, let's kick it off very simple. We've been talking over the past few days with specialists in different fields, specifically targeting everything that evolves around free trade zone in Costa Rica and establishing an operation in Costa Rica. So could you try to tell us a little bit, because we know it's a very complex subject, but can we start off with what are the tax incentives and the tax benefits that a company operating in Costa Rica can gain?
Sure. Well, in Costa Rica, we have a free trade zone regime, which is basically according to the law, set of tax incentives that the government grants to companies investing in Costa Rica. So that set of incentives is composed by exemption on corporate income tax, withholding tax, on payments abroad, value-added tax, customs taxes and duties, and also municipal taxes. Those are the main tax incentives that we have under the regime. Basically, this means that if you comply with the requirements, you will be granted with those incentives because those are listed in the law. So basically, all free zones receive the same conditions with certain differences depending on where the company will be located and the activity.
Great. I'll get back to you with two questions on that. So you mentioned a very important word, which is compliance. Okay? So if I may, and we can start with an example, a company that is coming from Chicago or Seattle, software development firm that's going to start their operations here. So let's say they've already set up a legal entity. They're browsing around to where they might set up their office space. When you say compliance, what would be the first step that they need to take? Let's say they come down to your office and they say, Jose, we're in love with Costa Rica. We're going to set up an operation. What would your guidance be and your first step towards that?
Okay, that's a great question. First, I would say that we need to identify the type of activity, because in this example, I understand that it's services, but it could be manufacturing or trading or other type of activity. So we need to identify what type of company will be operating in Costa Rica, because based on that, we will decide how the procedure will be implemented for applying to the regime. Then we will review the amount of investment in fixed assets that the company will commit before the government and the number of employees, right? There's an additional complication, let's say, for services, which is that we need to make a calculation of a formula, which basically considers the whole salaries to be paid in a year and the investment. Because according to the OECD commitments that Costa Rica has, we need to calculate the substance of that operation, right? So, for instance, you will need employees for rendering those services, right? We cannot have like a company providing services without employees in Costa Rica. That's needed.
Okay. Thank you for that. So let me ask another question within that route. Is there a minimum, or let me rephrase it? Is there a minimum amount of people, a minimum amount of investment when thinking about the free trade zone regime? And if I may, I'll ask you to respond one on the services area that you mentioned, and then the other one that might be manufacturing.
Yeah, that's a tricky question. That's the reason why you need to make a, let's say, business case before applying to the regime. Because in regards with investment, there are minimums, right? It would be $150,000 if operating within the metropolitan area within a free zone park. Okay. If you decide to operate outside the free zone park within the metropolitan area, it will be increased up to $2 million, right? So there's a important difference.
Significant difference, yeah.
Yeah. Outside the metropolitan area, it gets easier because it would be $100,000 within a park or $250,000 outside a park, right? Those are the main conditions because we have other categories that have additional investment requirements. For instance, we have a adventure park category,
Okay.
right, which has a requirement of an investment of at least $5 million. There's also an additional category which is for medical services when you decide to build basically a hospital outside the metropolitan area, right? It's just for outside the metropolitan area specifically. The investment would be $140 million, right?
Okay.
We also have a, let's say, subcategory of manufacturing, which is called mega projects. And for that one, the investment would be at least $10 million, right? Those are the, let's say, the general investment commitments. Now we move on to employment, right? I can say that normally there's not a minimum, but there's some trick there because if you are a mega project, you need at least 100 employees for applying to that type of investment incentive, right? For the services category, there's not a number of employees, but there's a calculation, as we were discussing before, that takes into consideration the salaries and the investment, right? So for that, you need to have an important amount of salaries paid during the year, right? So you will probably need a certain number of employees for complying with that. So the government will not tell you the number of employees, but you need to calculate how many employees you will need according to the formula
To get
right?
to the amount.
Yeah, correct.
Yeah. When you mentioned, and only one of the examples that you mentioned, let's say about the $150,000. How does a company go at spending or getting to that $150,000? What can they use as towards reaching those investments, and what is completely out of line?
Yeah, that's a common question because in Costa Rica we use what is called the IFRS, International Financial Reporting Standards, right? But in other countries, for instance, in the US, basically what is called US GAAP, which is their own financial principles, right? So there could be differences that the companies need to review for correctly identifying their investment, right? So basically in Costa Rica, let's say that as a general requirement for all companies, you will need to comply with IFRS, right? So that's, let's say, basic. Then, if we go back to your first question, if the company is deciding what will be their project in Costa Rica, I would say that it's important to consider that all the fixed assets that you purchase after you file your application to the regime will be counted as part of the investment, right? So in that part of the analysis, I would say, okay, you don't have to buy anything until we apply for the regime, right? Because if you buy a building,
if somebody's being proactive and they're coming down and they purchase 50 laptops from the US or bringing them down from Canada, too bad. That is not gonna work. They need to make that purchase after you've helped them out and they're starting that process.
Yeah, correct. And that's a common question actually. Yeah, because the companies, we have a complex beginning of operations in Costa Rica, right? Because first you apply for the regime, then you need other legal permits, so that could take some time. And normally the companies, they want to begin as soon as possible, right? So
Yes.
that we need to take that into consideration. We suggest from 3 to 6 months for beginning officially operating under the free zone regime.
Okay. Within those 3 to 6 months, is there anything that the company needs to be very careful as to not incur in any sort of penalties or not doing any specific activity within the period that the permit is being under review? Let's say it.
Yeah. Let's say that the company is constituted, right? The legal entity is incorporated in Costa Rica. You apply for the regime, but after you incorporate the company, until you file the application to the regime, you cannot be a taxpayer in Costa Rica, right? You cannot begin taxable operations because otherwise you would not be eligible for the regime, right? That's important. I'm thinking also about fixed assets that we discussed, right? The company needs all the documents for those assets to be taken into consideration, right? But you will not be exempt until the free zone application is completed and you receive your executive agreement granting the free zone status. So if you decide to buy something after you apply, but before you receive your formal notification, you will need to pay taxes.
Okay.
So that's important.
That can be a very expensive proactive mistake.
Yeah, correct.
And there's no coming back. It's just like there's no saying sorry, didn't know.
You could eventually recover the VAT as a VAT credit in your VAT return. Yeah, but if you are going to be fully exempt of most of the taxes in Costa Rica, you can offset that with tax obligations, but you will not have almost any tax obligation, right? So the recoverable process could be complex, right?
There's no way of a company that has already an operation in Costa Rica and has paid taxes to move to a free trade zone. Am I correct? It's just once you've paid.
Yeah, that's correct for manufacturing and services.
Okay.
Because there's a express limitation in the regulations, right? You cannot apply if you are a manufacturing company or services company already paying corporate income tax. If the same, let's say, corporate group will begin a completely new operation, they could incorporate a separate legal entity, right? Okay. And that new legal entity could apply to the regime, but it cannot then purchase or transfer the fixed assets of the already taxed company.
Yeah,
right?
moving payroll to that new entity or something like that.
Yeah, because that's, let's say, something like tax fraud, right? Because you will be saying to the government, this is a new
like
operation.
tax fraud or tax fraud. You can be open. There's no problem with that.
Yeah, that would be somehow tax fraud. Yeah, because the law explicitly states that you cannot transfer to the regime a already taxed company.
When can you tell us a little bit about how your team and yourself from day one, let's say somebody comes down and reaches out to Procomer or directly to your office and has that question, what would your recommendations be, and how would you tackle at the situation, let's say with the do's and don'ts, or have you had any two-part question? So let's go with that one, and then I'll ask the other one if I may.
Well, the first step would be review if the operation it's possible to incorporate it into the regime, right? Because there are certain activities that cannot be performed under the regime, right? For instance, you cannot be a bank and operate under the regime, right? You cannot grant loans to the public, let's say, under the regime, right? There are some cases which can be, let's say, reviewed and try to identify what part could be. For instance, let's say that a U.S. bank decides to incorporate a shared service center in Costa Rica. That's possible, and we have that in Costa Rica, but just the shared service, right?
Mhm.
The call center or accounting services, finance,
It's not an
human
operation that's
resources.
giving
Yeah.
out loans or
Yeah.
meeting credit cards and whatever.
Correct. That's the same for insurance and for financial institutions, right? We have limitations for producing some type of specific products, right? For instance, guns or something
Okay.
like that. That's limited in Costa Rica. But otherwise, in general, the activity could be performed in Costa Rica. Also, let's say that it's a manufacturing company,
Uh-huh.
right? We have a list of strategic sectors, which is basically that if you are part of that list, you can operate under the regime within the metropolitan area. If you are going to operate outside the metropolitan area, you could apply, and regardless if you are part of the strategic sectors list. For instance, medical devices,
Uh-huh.
semiconductors, those are strategic sectors that can be part of the regime within the metropolitan area. But let's say that you will, I don't know, produce some type of food or clothes that could only be done outside the metropolitan area. So those are some items that we need to review. Also, going back to the fixed assets,
Mm-hmm.
we will need to review what the company will invest and identify the commitment that would be advisable before the government, right? Because only, let's say, land, constructions, or any type of building, fixed assets, movable fixed assets, right? Computers, office equipment, manufacturing equipment, all those can be part of your investment, right?
Mm-hmm.
But if we go back to the financial rules, right? The difference is that sometimes companies decide to do not register as a fixed asset a certain amount due to a corporate threshold, right?
Mm-hmm.
Let's say $10,000. If something costs less than $10,000, it's a cost and it's not a fixed asset.
Okay.
That would be a problem because you need to register it as a fixed asset and depreciate it, right? So those are some items that we will need to review and try to advise on how you should implement your operation in Costa Rica, right?
Yeah, and when you talk about fixed assets, probably there are certain things that one might assume that as we're operating under a free trade zone regime, I can go ahead and buy myself a Ferrari and not pay taxes on it because we're an FTC company. It's sort of that's what comes to my mind when probably without having that knowledge, we're thinking that we can just pile everything into one and then gain that tax incentives that we provide.
Mm-hmm. Yeah, the limitation is basically that you can only use your tax incentives for your authorized activity, right? So I think that in almost any case, anyone would need a Ferrari for their operations in Costa Rica, but there could be an exemption, right? Let's say that, I don't know, you have a automotive manufacturing operation and you need the Ferrari for tests or something like that,
Right.
then you could eventually justify the purchase, right?
Okay, you're probably gonna get messages asking as to how to make that work within either a motorcycle or a Ferrari. Let's say the operation is already up and running. What happens with that? Let's say initial investment, or let's look at it at a 3 or 5 year period. So we're on year one. Within those 12 months and then the 24 months following, does the company need to comply? Are there any reports, something that they need to be held accountable, or just need to keep in mind the bookkeeping ledgers that they can be audited per se?
Yeah, of course. There's a common, let's say, mistake the companies can assume in Costa Rica, which is that they are fully exempt, so they don't need to file anything.
Okay.
Yeah, because they are a taxpayer with exemptions, so they must file corporate income tax returns, VAT returns, even though there could be no tax to pay or credit. They must file also municipal taxes returns, right? And there's an additional important report, which is the annual report of operations. It should be filed before Procomer, at least within the 4 months following the end of your tax year, right? So let's say that your tax year ends on December 31st, right? So you will have the first 4 months of the following year to file that report, right? After you file your corporate income tax return, you file your annual operations report, and in that there's a lot of information. You have to include your financial statements, the information about the number of employees and the salaries that you paid, the investment that you already incurred, and so on. So that's the first step. Also, Procomer audits companies under the regime at least 2 or 3 years, or eventually after that. But normally there's an audit by Procomer to be performed, and they will review your investment and the employees that you have.
What happens if somebody forgets, or for whatever reason that doesn't get filed?
The annual report of operations.
Do we incur penalties? What, not trying to scare anybody, but just, when they're coming down, just keep in mind that we need to have somebody in place, in office, or it can be, I assume, an outsourced service keeping tabs on that.
Yeah, that would not be good, because you have, let's say, 3 opportunities. The first one, within the period that is granted, if you do not file the report, Procomer will notify you, and you will have 15 business days. If you don't file it, you would receive another notification, and the final 10 business days. After that, you are not compliant. So if you do not comply, they could sanction you, and your tax incentives could be suspended.
Revoked.
Suspended until you file the report. But if you simply disappear and do not file it, your your free zone regime could be revoked eventually. But it's a very worst case scenario that normally does not happen, because companies just file the report, right?
Yeah, but very, very important to keep in mind as well that it's not just coming down, making that investment, and then everything will fly by without having the due process of diligence to be kept.
Yeah, of course, because the government is granting the company tax incentives, right? So they have to control what you're doing with those tax incentives, right? And also confirm that what you said you were going to do in Costa Rica, it's what you're doing, right? For instance, you are producing Ferraris, right?
Yeah.
So you are effectively producing Ferraris and not airplanes or something completely different, right?
Okay. Jose, thank you very much for joining us once again. And is there anything that you think I might have missed that you'd like to share with the audience? Please go ahead and do so. And I feel it's important as well to open up the invitation and wrap it up with why Costa Rica could make a good standpoint on the tax incentives front.
I think that Costa Rica has significant advantages. We already talked about the tax incentives under the free zone regime, right? But we also are located in a strategic position. We have not talked about free trade agreements that Costa Rica has with the US, European Union, China, a lot of important markets. Actually, soon we'll enter into force the free trade agreement with Ecuador. So Costa Rica is expanding its free trade network. So it's important and it's beneficial for manufacturing companies, right? Also, we have skilled people for services industries, and the government is aiming to increase the preparation in the public universities and technical high schools. So we have that spirit that any company would want in a country, right? People willing to to grow and have opportunities. And we have a incredible country with natural resources and beautiful places. So that's a perfect location for a company to invest. And I invite anyone interested in operating in Costa Rica or expanding their operations to other jurisdictions to come to Costa Rica and talk to us and review their case and see if it's possible to operate in Costa Rica under the regime.
Awesome. So once again, thank you very much, Jose. If anyone has questions, we'll be adding your profile there so they can reach out and to you and your team and explore any potential opportunities within Costa Rica.
Perfect. Thank you for the opportunity.
Our pleasure.